Hi YouTube. Silver in the news. There's a couple little data points that I wanted to kind of go over with you guys. A couple things I found interesting. Kerr Mining came out with their earnings a week ago, and they posted a pretty large loss, and also Pan American Silver. So I'd like to have a quick discussion with you guys about it. And also, before we get started, the Silver Institute is coming out with their annual report, and I'm really excited to take a look at this because this is honestly, for me personally, the key piece of data every single year, and I enjoy looking at it. They break down everything from supply and demand, and in that report there's a category called Implied Net Investment, and it was always a source of confusion exactly what it meant. So they're actually going to relabel that, and they're going to call it a silver surplus. So it's always been a ledger adjustment, right? It's simply what's left over. And they always called it implied net investment. Well, now they're going to call it silver surplus. So hopefully that alleviates any confusion that people have, and that is literally just as it sounds. It's what's left over for the silver once all the supply and demand calculations have taken place. So the reason that I like looking at it is I like to look at what categories are growing, which categories are shrinking. You know, obviously, like say photography, it shrinks every year, but the impact of that shrinkage is diminishing every year that goes by. And also, I like to look at the solar demand and everything else. Okay, and industrial demand certainly. So Kerr Mining came out with their earnings report, and I'll link it in the description box. And it was kind of a disaster. Okay, they lost $37.2 million on lower metals prices. Okay, that works out to be 36 cents a share. And you know, why does this matter? Because with silver where it is, these miners are going to start feeling the effects. And how do they behave when they're hemorrhaging cash? Okay, and right now we're seeing that with Kerr Mining. Like I said, they lost $37.2 million. Yeah, they can weather the storm now. And right now, let's see, they said that the firm is keeping its full year guidance for exploration at 23 to 28 million. So that's they're still going to be aggressively exploring, but at a certain point, there's only so much cash you can hemorrhage. Okay, so you know, they need to see a higher metals price. Now the thing is, they actually silver output was actually up 7% versus the year ago quarter. Okay, and gold was up 3%. So they produced more metal and lost more money on it. And they say that their all-in costs were $19.12. Now, here's the thing. I know that the mining industry likes to use cash costs as the metric, and I've always thought that was complete bunk, okay? I feel like that's basically their way of trying to make it look like their profit model is better than it would seem. You know, when you say, yeah, we're pulling it out of the ground at $8 an ounce, you know, isn't that great? I mean, intuitively you think, well, gee, they should be making 12 bucks an ounce on every ounce of silver they pull up, and it's obviously not the case. You know, the other implication is, gee, silver can go down a lot more and they'll still be profitable. That's clearly not the case. Kerr Mining lost $37 million. Also, Pan American Silver came out with their earnings, and let's see, they actually beat, and they made $6.8 million. Okay, that's a pretty small profit, 5 cents a share. And let's see, gee, it turns out that they produced 6.1 million ounces of silver. So literally, you can exclude the gold that they mined, you can exclude the zinc that they mined, and all the other metals, and basically say they made $1 an ounce on silver. Okay, so once again, you know, when you're looking at all-in costs, they're getting pretty close to. Let's see, right here it says their all-in sustaining cost per silver ounce was in the range of $17 to $18. Okay, so they're obviously in a little bit of a better position than Kerr Mining was, but they're still going to feel the effects. Okay, going forward, now, does this matter now? No, they're obviously hanging in there, but as these companies begin to hemorrhage cash the way that they are, you know, they're going to have to start looking at future exploration. It will start to affect supply. Last year was a record for supply for silver. Okay, between mining and between scrap. And I expect to see more of the same when we see the report coming out later in the week, that it was yet another record. Because both of these companies still produced more silver than they did in the year ago period, okay? But going forward, they're not going to be able to keep doing this, especially with silver where it is. And and other costs going up. So it's just something that I found interesting. Like I said, I can't wait to see what that report brings, and I'll certainly be talking about it. And I can't wait to see what Moments in Trading comes up with when he does his breakdown, because like I said, he always does a great job with this stuff, and I can't wait to hear his take on it. All right, guys, I'll talk to you later.